Hey everybody, it's Brian Shannon from alphatrends.net. Today is Friday, the 9th of September 2016, and we had some selling here in this market as we have been having more of a range-bound market. We finally broke the range, this time to the downside, and now the month of September is starting out on a pretty negative note. So let's take a look at the charts here and see what happened. This was, this is the 4-day week that we saw, and things were looking like they would probably be pretty uneventful. I was thinking that we would, as long as we closed above 218-ish, that we would be set up for a potential of further increase in prices next week. But instead, obviously, the market gapped lower, and then as it was below that volume-weighted average price for the day, you can see that we stayed below that the entire session, and there was zero advantage to being a buyer. I'd pointed out on StockTwits that we had two levels of interest that kind of came together, and that was this prior low that kind of came together just near the volume weighted average price from Brexit. Obviously, neither of those levels were any support, so that's why we look at them as a potential level of support. Just, some people buy pullbacks to a rising 50-day moving average, and we don't want to buy a pullback to a moving average. We want to look for evidence that the buyers are gaining control. So when the stock was at the S&P, that is, was at 216.30-ish, was there any evidence of support? And the answer is no. We were still below a declining volume-weighted average price, which said there was no advantage to being a buyer in there. As we broke below the lows from August, there was zero evidence that buyers were gaining control in there either, and there was zero evidence of support at the volume-weighted average price from Brexit. So we have potential levels of support, and we need to listen to the message of the market and say, as long as we're below the volume-weighted average price for that day's session, then it's guilty till proven innocent. We want to be aware of potential levels where support will be found, but we want to wait until we actually see evidence that there are buyers there if we're going to follow their lead. We're not just going to take guesses and stick in bids hoping that we get hit and then wondering what to do with them later, because obviously this market finished on its worst level of the day right here, down another dollar plus in the last half hour of the session here. So where are we? Well, on the bigger picture, we've got this prior band of resistance up in here, and that resistance is likely to offer support, but so far there is zero evidence of it, so you don't want to be a buyer just based on the potential for support. Instead, let it bleed out. Let the buyers come in and show themselves and create another base for this market to move higher from. Right now, you don't want to be a buyer into this. There's a lot of damaged stocks, and they will need some time to heal. So the market has spoken, and it's our job to listen to the message of the market. The message is, in the intermediate term, we have sellers in control. They took control with vengeance today, and really just, people were spitting their stocks out here at the end of the day. So next week, what's likely, I think, would be that we will begin to level out somewhere in this general area, and then we will most likely see some sort of bounce, and it'll be the nature of that bounce that determines whether people are going to be using that bounce to reduce their positions overall, or if they're going to continue to push higher, back higher once again. But we have to be aware, where are the potential levels of resistance? Well, I think that 215, this was prior support in here briefly, and then up at 216.5. So if we get bounces, treat them as bounces. Don't treat them as a turn back higher. The Nasdaq was down pretty significantly here, obviously, as well, slicing below its advancing 50-day moving average, and also when we look at the weekly time frame, back down to the highs that we'd seen late 2015. So you've got to just be a lot more defensive, and again, listen to the message of the market. When important support is broken, especially with such vengeance, you want to look at it and say, where are we in relation to the 5-day moving average? We're below it. What's the direction of the 5-day moving average? It's declining. Where are we in relation to the volume weighted average price for today? When we're below that volume weighted average price, there is zero advantage to being a buyer, and this is what stops are for. These types of days where if you had stops underneath this level, and it prevents you from losing a whole bunch more. And we got stopped out of all of our long positions today, and we have one open short position in Alpha Trends. And 5 of the 6 stocks we were stopped out of with gains. One for a loss, I think of it was 13 cents a share. So if you're disciplined, it doesn't have to end badly. People always say it's going to end badly. It doesn't end badly if you have a plan. Have a plan of action, and then you're never surprised. We broke multiple uptrend lines in the Russell 2000 this week, today basically, and we're coming down to the rising 50-day moving average in here. It's a potential level of support. Where's the volume weighted average price from the Brexit lows? Maybe it continues down to there. It's not our job to play guessing games, but we have to say what are the potential areas, and then look for evidence that there are in fact buyers there. The buyers did not show up in the Russell 2000 or these other markets. I mean, we went sideways for a short period of time in here in the afternoon, but again, that was still in the confines of below a declining volume weighted average price, which means that those types of little bounces are treated as just bounces within the downtrend that's most prominent on that shorter term time frame. And as we are below key levels of support at this 124 and below that 5-day moving average, which is declining, we see the same thing, that you just simply cannot blindly buy into levels. Some people will be buying at the 50-day moving average on Monday, I'm sure, if it gets there. But it could continue to go back down into this area. If you're looking to buy near that 50-day moving average, then what you need to look for is, let's see if we can do this. What you need to look for is, that it comes down to that level and begins to turn sideways, and then we start to see it back above the 1 and the 2-day volume weighted average price, and then we look to say, where does it have the potential to go if it does in fact bounce? Well, this prior support tells us that there's most likely limited upside in that market. The semiconductors, we had been observing these and saying it's innocent till proven guilty. On Thursday, we broke down, but we broke below the trend line that's been involved here for the last month or so. So we broke that trend line, and as I always say, a trend line break doesn't mean you will get a reversal. It means a slowdown in the rate of ascent. So on Thursday, we were looking at it saying we've got to be very careful, and this needs to get back above 66.50, that we don't want to be a buyer, that you want to have your stops in place. And it's for reasons like this. When you have a market that's this extended and everybody knew it, yes, it was a matter of time before it sold off, but the people who've been calling for that top and fighting it all the way over here, a lot of them didn't even make money on their shorts because they had already been squeezed out. But today, obviously, with that breakdown and continued move lower below the volume weighted average price, there was zero advantage to trying to be a buyer in this market, even on the short-term time frame, the 2-minute time frame. There's no evidence really there's no evidence at all, rather, that the buyers have made any significant attempt to absorb enough shares to create enough demand to find support in here. If we look at the volume weighted average price since Brexit in here, you can see that it's still significantly below the market, and we've got a 50-day moving average that's below the market as well. Maybe we undercut the 50-day moving average and then bounce, but again, there is zero evidence that support is being found. The biotechs this week did get a little bit of a bounce for a bit, but they of course encountered the resistance at the prior level of support in here, and that's what they're supposed to do. Now, it doesn't mean, as I mentioned to people, you don't want to just sell short right in here while the trend is still higher. So it wasn't, for me at least, a shortable event, because I don't want to short while it's above a rising 5-day moving average. And you're not going to get a 100% of the trades. Nobody does. But if you have a disciplined approach to the market, you're going to know that this is a potential level of resistance, and you don't want to be taking too many big chances. Just like Apple looked like after their event that maybe things were going to turn back higher for these guys once again, but they the next day they broke back below the volume weighted average price since the last earnings report, and then they undercut this support, so it's back to lower lows and lower highs for Apple on a intermediate term time frame. We undercut the 50-day moving average, and I'm sure people got burned there. We've got a volume weighted average price from Brexit just below us. Maybe this market is going to come in and close this gap. You just don't know. But the fact is, it's in a downtrend on the intermediate term time frame, which means you don't want to be involved in it. Treasuries broke down pretty significantly here, and we've been talking about this being the key level of support, that if that support breaks, then it signals trouble. And we had seen, lower highs coming into it and more frequent tests of that support. So, now they're on the daily time frame, they are highly suspect in here. Probably due for a bounce, at some point, maybe after a couple more days of selling. But this prior band of support is now very likely to be a level of resistance. We got stopped out of Alibaba this week with a nice profit. And actually, I'm embarrassed to admit, but we got stopped out right over here a week ago and missed this part of the move. But we did get stopped out of Facebook. What's that? FB. We did get stopped out of Facebook right over here 2 days ago, so that was nice after being involved, I think, over in here. But there's still going to be a lot of opportunities. Obviously, if you have a consistent, disciplined approach to the market, and that's what we focus on every single day at Alpha Trends. So come on by and take a look sometime. Enjoy your weekend, and I'll talk to you next week.